but I choose a stock of the day. I thought I'd do two today because fascinated by some research that's come out from Odd Minute, because tonight's Powerball, in case you didn't know, $160 million jackpot. It's going to be a record jackpot. So I decided to make the Lottery Group stock of the day. Johnny is David Lane from Odd Minute to tell us about what lured him into the draw and how much revenue a Lottery Corporation can expect to generate. So David, should we be taking out a Powerball ticket or buying Lottery Group shares instead?
Well, yeah, it's not investment advice to buy a ticket in tonight's Powerball, but I must admit I've done that. Many other Australians have done that because we always think there's a slight chance of winning, even though there's only a 1 in 293 million chance of actually winning.
Oh, David, we don't want to know that figure.
And I'm sure I'm that one.
Yeah.
But the Lottery Corp, which recently spun out from Tabcorp, it's now a pure lotteries business, and that's exactly what they're banking on. So what our research has actually calculated is that there's a fear of missing out point. So when there's the lower jackpots of 20 or 30 million, regular people buy the tickets on an ongoing basis. But once they reach $80 million or above, that tends to be the point that gets people's attention, and those mega jackpots get major turnover. So there are a few of 120 and 150 million dollars last year. They got a turnover of about 1.2 times. Interestingly, in February this year, there was a $120 million prize, and that got $240 million of turnover. So
wow, we
are actually seeing in these uncertain economic times that perhaps people are putting more faith in gambling, and gambling traditionally has been a recessionary proof business. But our calculations are that with last week's $100 million jackpot and this week's $160 million jackpot, that the Lottery Corp is likely to have about $500 million of turnover. So double what the actual prize pool is. So it's certainly a calculated move as far as the Lottery Corp is concerned, because they know that when they're advertising those big jackpots, they get the jackpot as far as the turnover.
Because the thing is that when you get with the 100 million last week, say they got 140 million or whatever in revenue, didn't go off. So that week's just stays there, and then everyone they paid nothing out or very little out of it because there are minor prizes, but very little out. So that's all their margin. And then this week is more than self-funding in its own right.
Absolutely right. Yeah, that's it. Yeah, we're anticipating about $200 to $240 million just this week. So it definitely gets people's attention. It's one of those things that we all like to think that we've got a chance of winning.
So with these two, are you forecasting an earnings upgrade for Lottery Corp?
Well, it's interesting. It's part of their longer term strategy is to actually invest in those mega draws, and we think it's actually a smart business decision for them to do that. The jackpots overall are up about 22% this year, and the turnover that they've received from those, is indicative of that.
Okay.
And the other interesting thing about the Lottery Corp is that they are now about 33% of their sales are online.
Right.
So they've really, over the last 3 or 4 years, been able to crack into that online market. So, as a business, obviously, leaving aside any personal views that you might have around gambling, we think that the Lottery Corp is an interesting business, and we think that it's the better part rather than the Tabcorp, which has been left behind.
Is it a buy?
Accumulate we've got on at the moment. Yeah.
Oh, that's sort of a weak buy. Okay. All right.
Yes. Yeah,
David, fascinating figures. Thanks for telling us about it.
No worries.
Good on you, mate. David Lane from Odd Minute. Really interesting research. David Novac, what do you think of Lottery Corp?
Personally, look, it's a hold, I think, at best. I prefer Jumbo Interactive.
Right.
A better value. It's not cheap. Lottery Corp is around 7% earnings multiple, but their numbers in revenue growth of 9.4%,
Right.
EBITDA 11.9, pretty good. But look, when it did demerge from Tabcorp, the shares went up to about $4.90 or something,
yeah.
and now falling back to $3.90, bouncing back up above $4.
Yeah.
But according to the charts, it's still not a positive trend right
Okay.
now. So.
Grady?
I actually really like this stock. There's about 7 brokers with strong buys on this stock.
Right.
It was interesting to note that when they did demerge from Tabcorp, obviously new CEO, but CFO, COO went with this business. So very strong management team. They've got a history in the industry, and at the moment, everyone's buying Powerballs. I went and bought one just before I came here, so I'm in it to win a Koshi. But yeah, for the moment, this one is a buy. It's a buy by 7.
Yep.
There has been a decline, showing an 11% decline in lottery volumes recently, but people piling back in because the numbers are going up. They're addressing this market, the FOMO
as
we're
David
talking
was
about
saying.
just then, So everyone gets FOMO. I got FOMO, so I had to buy a ticket.
Okay. All right, the other stock of the day I thought we'd look at, but only because ANZ released their full year results for the year ended September. Business's cash profit up 5%. $6.5 billion as its home loans business improved, and higher interest rates boosted margins in the second half. Statutory profit after tax up 16% to $7.12 billion. Bank says cost of living pressures starting to have a meaningful impact, and next 6 months will be testing. ANZ proposed a fully franked final dividend, 74 cents a share. Stock down 3% today. Dave, a good result, but that guidance seems to have spooked the market.
Yeah, I think so, and probably a concern about around the net interest margin as well, but more so going forward, as I said, with the rate rises and the pressure that's going to put on households. I mean, look, we've had the highest rate increase in 40 years.
Yeah.
And, the big R word is that threat.
Yep.
So,
After a recession, we should say to people. Yep.
And my past life, I used to be in merchant banking for 12 years as a chief accountant of Barclays. And so I know about banking and when bad debts start to rise, because there's been nirvana for banks for the last 40 years, where you've got, rising debt and no bad debts. I mean, eventually that turns, and then the banks stop lending, and then you increase provisions.
The old credit squeeze.
Yeah, the credit squeeze, that's right. So we haven't had that since the 80s.
Yep.
So I think that's something that people are cautious about going forward.
Are you into the banks? How do you see ANZ?
Look, it's it's a positive trend here. If you've got it, if you've bought it and you've had it forever, you'd hold it. But I wouldn't be rushing to buy this sector.
Okay. Grady?
I'm in exactly the same view as you. It's interesting to see ANZ, the last interest rate hike, ANZ was the first bank, not even, I think, an hour afterwards, to say they're passing on the full rate hike. So coming out that quickly and being so responsive was a bit of an indication, and obviously these results were exactly the same. So I think we're looking, or across the banks, you're looking for increase in provision for doubtful debts, and with interest rates rising, a lot of people took out home loans they couldn't afford. So that is the way forward, looking at the banks. And I think, for me, it's exactly the same as you, a hold at best.
Okay.
But it's erring on the side of caution right now.